Florida is one step closer to ending property taxes. What happened in Tampa recently shows you how intense this fight is going to get. In this video, I'll explain how one meeting lit the fuse on one of the biggest tax shifts in Florida history and what this means for homeowners and investors like you. I'm Jim Shields with Southern Impression Homes. I build and invest in Florida real estate, and what's happening right now could change everything about how we own, rent, and invest here. If you own a home or plan to buy one, this is one tax change you cannot ignore. So forever, people have been complaining why taxes feel broken, and it's because taxes are the one bill you can never escape. If you don't pay, you lose the home. You are taxed every year on value the government assigns, even if you never sell, and it makes true ownership feel like renting from the government forever. So let's talk about Tampa and why what happened over there really matters. Because at this live forum, leaders in the state argued about how much local governments actually rely on homestead taxes. In Largo, for example, only $9 million of a $239 million budget came from homeowners. That's 4%. The argument that we can't afford to cut is not holding up to scrutiny. And there's lots of proposals being made about how do we float this difference. Well, one idea is that a 3.5% sales tax that brings in tourist dollars instead of raising costs on the locals. Another idea is to eliminate homestead property taxes altogether. Either way, it's going to go to the voters in 2026. You're going to have to decide. So what's going on with DOGE here? The Florida Department of Government Efficiency has already flagged nearly $400 million in local waste. Now, Jacksonville and Orange County, for example, they have overspending and bloated budgets that are way out of line with population growth. So this strengthens the argument that property taxes are not the only way to fund essential services. Let's get rid of the bloat first and then only focus on what's essential. So what does this mean for you? If the amendment passes, your homestead taxes could drop to zero. For investment properties, it could be 50%, possibly more. We have to wait and see. And that means lower monthly costs, better cash flow, and more long-term equity. If it fails, counties will likely continue to raise rates to cover overspending. Either way, you need a plan ahead of time based on the direction that this is all heading. So don't get caught in doubt. You might be saying, oh, they'll never eliminate property taxes. This won't ever affect my primary home, or government budgets are already lean enough. Those things are designed just to keep you passive. The truth is there is room for improvement. All those things can happen and change is coming. So the question is whether it benefits you or it blindsides you. So for us here at Southern Impression Homes, what we're doing, we're modeling tax shift scenarios for every market we build in. Just in case it happens, we want to be really on top of it. We're tracking audits, reform proposals, and county-level budget risks. And we give buyers and investors a side-by-side cost forecast with and without homestead property tax and the different levels that they could possibly go down. So how should this guide you? As a buyer and investor, you want to run the cash flow scenarios with and without property taxes. Yeah, they might still be here, but if the numbers work today with property taxes, where could you be in 3 to 5 years with no taxes on your property? Something you want to look at and do the numbers on, and track what your county receives from homestead taxes and how it's exposed. They might be able to make up the shortfalls in other ways, not only on homestead taxes, but on investment property as well. This could be part of the reform. So you should start planning around this for 2026 because changes could be coming very soon. Okay, so if you're a real estate agent, educate yourself on the difference between the homestead, non-homestead, and what might be happening in your individual counties with the tax exemptions. It could be happening on both. There are also some commercial tax structures you might want to be aware of. So help your clients understand how proposed amendments for taxes can affect value and affordability, which is absolutely key, especially in times like now in real estate, and position yourself as the go-to expert on the biggest tax changes that are happening in decades. If you talk to your clients about this, they're going to know you're in the know and that you're one to work with. Overall, this is bigger than just a tax cut. It's a shift in how Florida thinks about home ownership and rental property. For decades, we've tied ownership to recurring government payments, and that could end, Florida being the first, but only if homeowners understand what is happening and they take action. Something you want to be a part of and something that you absolutely want to capitalize on. Now, if you want to learn more about how this works, click the subscribe button, and we'll be talking more about this in the coming weeks as things develop within local and state government to make a final decision on whether taxes will remain or whether they'll go.